banking and financial space. A whole host of earnings came by during the weekend, led by Kotak Mahindra Bank, ICICI Bank. There was, of course, Paytm as well. Santanu Chakrabarti, was the India analyst BFSI at BNP Paribas, joins us now to discuss what he made of these earnings. Santanu, good morning and thanks for joining in. I want to start with ICICI Bank, right? It was clearly a purple patch. I mean, there was nothing that went wrong this time around in terms of earnings. But from a stock and valuation standpoint, what kind of an upside do you see? Have you scaled up your either your earnings estimate or your target price?
Right. So if I look at the numbers that ICICI Bank has turned in, I think the strongest part of the numbers is, of course, within the credit growth piece. Even with only 3.5% kind of sequential growth in wholesale, if I look at what business banking has done, what SME has done, what retail has done, and within that, even what specific subsegments of retail has done, it's a very, very impressive performance. Where margins marginally below where people expected it to be? Yes, I mean, we had been expecting a moderation in margins. And in our quarterly preview, we had also pointed out that this was probably the one stock where negative surprise on margins is possible. But because the growth was so healthy at an overall NII level, I mean, there's practically, no disappointment at all. And from there on out, since they posted the lowest credit costs in a long, long time, ROEs appear very healthy. Of course, one needs to normalize credit cost to think through sustainable ROE, but nothing major really to complain about in the numbers. If I were really, splitting hairs, I would say that, their current account, savings account money performance, I mean, while it's been weak for the sector as a whole, they have somewhat lagged their best-in-class peers, especially within the context of current accounts, and maybe that's a minor quibble. It's really, finding fault with what is essentially a very, very strong print.
Okay, hi Santanu, good morning. Good to hear your thoughts on ICICI Bank. Let's focus on the other big name, Kotak Mahindra Bank. They've got a new appointment coming in there, Mr. Vaswani, and also the tenure has been given as 3 years. What do you make of this, as well as the 3-year term that's been already approved?
Well, I mean, Mr. Vaswani obviously comes in with a illustrious track record, but what is interesting for us to note is that that track record, for the best part, is actually outside India. Every company, every bank, at any point in time when it makes a leadership-oriented decision, there are certain skills or abilities that they prioritize. What is very interesting for us is the message within this appointment. That Kotak Bank clearly is thinking a lot more seriously about digital and the emerging segments like unsecured lending, like personal loans, like payment products, and so on and so forth. And if you really go back and look at their historical approach to unsecured lending, you'll realize that a lot of water has actually flown under the bridge in the last, especially 12 to 16 months. And I think this particular appointment, which, with the limited amount of information that we have, seems to be one which preferences, knowledge about emerging technologies and the digital infrastructure more than, maybe India-specific domain experience, is a pointer towards what the bank's strategy is going to be down the line. It's probably an early signal on what the bank's future shape is going to look like.
Okay, all right. So that's on Kotak Mahindra Bank. But in terms of, the stock price, what is your view now? What kind of an upside do you see, if at all? And compared to peers, right, now that there is a new management at the helm, of course, you will need to take some time to assess what the management does from here on and how things could change. But compared to peers, what does your pecking order now look like in the private sector space?
So our pecking order is actually HDFC, followed by ICICI, and then Axis, and then SBI Kotak. Okay. So Kotak is lower down the pecking order, and we'll explain why. The reasons are very simple, and they relate to valuations and growth. Now, the slightly higher than system growth that Kotak has been delivering, actually it's slightly higher than peer growth, meaningfully higher than system growth. In the last 4 quarters, a little more, is actually highly necessary given Kotak's valuations. And it relates to its capital structure. So this is still a bank which is about 60-70% below the leverage threshold of most other peers. And this has implications for its core ROE. So even if the ROA is very healthy, once you're gauging a bank in terms of what core price to book multiple it's trading at, and clearly there amongst the larger banks, Kotak appears to be the most expensive, then the question of ROE starts to come in. And the only organic solution to a high ROA but limited ROE problem seems to be high growth. And this has become very clear to us. And it was one of the reasons why earlier we had a hold on the bank until the stock corrected quite a bit. From that perspective, them giving 6% sequential growth is great news. The fact that they are not easing or taking their foot off the gas as far as their new focus businesses of personal loans, credit cards, or for that matter, even microfinance is concerned, is again good news. But this growth, significantly above system level growth, needs to sustain for at least 3 years before the ROEs reach a stage which can justify the current multiples.
Sure.
And that's how we'll have to think about that.
All right.
Can Kotak deliver that? So far, so good, at least in the last 4-5 quarters. But the ask is there and the ask will remain.
Got it. That was a really helpful conversation to understand how, investors should react to the new management on board and the numbers as well. Santanu, thanks a lot for joining in. Let's take